Tesla stock investors got great news yesterday from the company that delivered and apparently is firing on all cylinders. I looked through the company's shareholder letter and the quarterly conference call, and it was hard to find anything not to like out of Tesla's latest quarter. With that being said, I'm going to go through some of the good items that Tesla stock investors can look forward to in upcoming quarterly earnings results in the future. So let's take a look at these details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the more surprisingly positive things that came out of the company's quarter was the forecast for vehicle growth next year. So Elon Musk said that at the risk of taking a optimistic approach here, which Tesla's in the habit of doing, I wanted to give a rough estimate, which I think is 20 to 30% vehicle growth next year. Now, of course, with some caveats, including that if there's any negative external events, like if there's some force majeure or some big war breaks out or interest rates increase or something like that, unless something big like that happens, Tesla thinks they'll grow vehicles by 20 to 30% next year. That's in that they don't really specify whether this is production or deliveries. I would suspect they mean deliveries here because Tesla's not in the habit of overproducing and piling up inventory in most cases. So this looks like a forecast for deliveries next year. And even if you take into account that Tesla is usually in the habit of overpromising and under-delivering, even if you take that into account and you say, okay, let's just slash this forecast in half because they're just always, being a little too optimistic. So let's slash it in half. Even if they grow vehicles by 10 to 20% next year or 10 to 15% next year, that would be really, really good growth numbers in an EV industry that's struggling. And next year, I don't expect the EV industry to do much better next year than it is doing this year. That is in the United States primarily. China, I think the EV industry in China will continue to do really well. But I think Tesla faces strong competition in China with very, very low priced models and other models that are in Tesla's price range. So I don't expect that market to be a lucrative one for Tesla longer term, but they may find growth in that region next year, given that the fiscal stimulus in China may help consumers there. But I don't know. That's a really difficult market, and the macroeconomy in China is not doing well. Consumers do not feel like spending money in China, and so it's going to be difficult. It's going to be difficult. And then in the United States, Tesla's losing market share almost every quarter ever since competition really entered the space. So for Tesla to deliver even half of the growth that they forecast here would be phenomenal. I think that would be a huge success for Tesla stock investors if the company delivers anywhere between anything above 10% growth in vehicles next year. I think it would be a huge success for Tesla stock investors. Now, one of the reasons why management is confident in this forecast is they plan to launch lower cost models next year. Now, it's not going to be a $25,000 model, but it is shaping to be something lower priced. So even if they can get something, in the $32,000 price range, 34,000, 30,000 would be incredible if they can get something in that price range. Maybe Tesla's willing to accept lower profit margins to sell the car at closer to $30,000 and then hope to make up for the profit margin by selling supervised self-driving or other services on top of the car sale. That remains to be seen, but the unit growth would be truly impressive. They also talked about the CyberCab reaching volume production in 2026, and they're aiming for at least 2 million units a year of CyberCab, maybe 4 million units ultimately. And again, if you just take Tesla's over optimism and you just, slash this by half, it would still be really strong. It would be incredible for the company to actually deliver a CyberCab, which is a robo taxi, which is driverless cars out on the road, generating sales by offering people rides and a price per ride basis. That would be incredible. So even if you have this, and even if you take their volume production target of 2026 and you push it out to 2027 or even 2028, if they're able to deliver that, that would be really good news for Tesla stock investors. So very big forecasts here from Tesla coming out in the latest quarterly conference call. Another big positive is their battery production. The 4680 is rapidly approaching the point where it's the most competitive battery. So when you consider the cost of the battery pack fully landed in the United States, net of incentives and duties, the 4680 is tracking to be the most competitive, maybe the lowest cost per kilowatt hour than any other alternative. And they're not quite there yet, but they're making great progress. And that's in part what's helping the company lower the cost per unit of producing each of their cars, which is a strong competitive advantage for Tesla. It's one of the only companies generating profits on EVs. And so this is one big reason for that. It's a big competitive advantage. The battery is one of the largest cost components of an electric vehicle. And if Tesla can continue making progress on this front, it gives them a huge competitive advantage, which again is great news for Tesla stock investors. Still, the company's saying that most of their batteries come from suppliers. They're not able to produce these at scale enough to fulfill all of the cars they're making. Remember, they produce close to 2 million vehicles annually. They don't have enough of this 4680 cell to fulfill all of their needs. So they're still buying a lot from suppliers. But it is good news that Tesla internal cell development is likely to be the most competitive in the United States. And if they can continue to drive reductions in cost and increase scalability, that will give them a lasting advantage in the electric vehicle industry, which I think is most important for Tesla, is getting those cost of production down lower and keeping them lower. That's their biggest advantage in this space. And keeping that, even if they go and transition to becoming a robo-taxi business, they're still going to need to produce these robo-taxis that need batteries. And so if they can produce them internally at lower cost, at larger scale, that gives them a huge advantage against the myriad of other companies that are developing driverless car technologies as well. It's not only Tesla that's developing driverless car technology. So overall, really great news here for Tesla stock investors, even though if you don't already know, I'm not bullish on Tesla stock. I'm actually bearish on Tesla stock. That doesn't matter here. The company delivered an excellent quarter, and credit where credit is due for Tesla here. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.